In the late 1960s, Norway was a nation known more for its stunning fjords and hardy fishermen than for vast underground riches. Few believed significant oil deposits lay beneath its challenging North Sea waters. Geological surveys had, for a long time, painted a rather bleak picture. The prevailing wisdom suggested that the Norwegian continental shelf was unlikely to yield the black gold that was transforming economies elsewhere. Companies were hesitant, the conditions were tough, the risks seemed to outweigh the potential rewards. Most experts, if you asked them, would have shaken their heads and pointed to more promising regions of the world for oil exploration. Then, on a cold December day in 1969, everything changed. An American oil company, Phillips Petroleum, made a colossal discovery. It was the Ekofisk field, one of the largest offshore oil fields ever found at the time. Suddenly, Norway, a relatively modest European country, found itself on the cusp of an economic revolution. The sheer scale of the find was staggering. It wasn't just a small pocket of oil, it was a supergiant. This discovery would not just alter Norway's economy, it would redefine its future, presenting both immense opportunities and significant challenges that other nations had famously fumbled. The news sent ripples of excitement and apprehension through the nation. The initial reaction was one of cautious optimism, mixed with a degree of national disbelief. How could a country with a strong tradition of social democracy and careful management of natural resources handle such a sudden influx of wealth? The government understood the potential pitfalls. They had seen other nations, blessed with similar discoveries, fall victim to what became known as the oil curse. This curse often led to rampant corruption, internal conflict, and economies that became dangerously over-reliant on a single commodity, neglecting other vital sectors. Norway was determined not to follow that well-trodden, unfortunate path. This pivotal moment, the discovery at Ekofisk, set Norway apart. While other nations might have rushed to extract and spend, Norway paused. It considered the long-term implications. This foresight was crucial. It laid the groundwork for a unique approach to managing natural resource wealth, an approach that would become a global model. The Norwegians knew this was a finite resource. They understood that the decisions made in these early days would echo for generations. This was not just about immediate gain, it was about securing the nation's prosperity far into the future, a concept many others had tragically overlooked. Many oil-rich nations, upon discovering their subterranean treasures, experienced a fleeting boom followed by a devastating bust. The sudden influx of petrodollars often led to inflation, the neglect of other industries, a phenomenon dubbed Dutch disease, and a widening gap between the rich and the poor. Political instability frequently followed as factions fought over the spoils. Corruption became endemic in some states, with elites siphoning off national wealth for personal gain, leaving the general populace no better off, and sometimes worse. The history books are littered with such cautionary tales where black gold turned into a national burden rather than a blessing for all. Norway, however, consciously chose a different route. From the outset, the Norwegian government established a framework to ensure that the oil wealth would benefit the entire population, not just a select few. They implemented high taxes on oil companies. They ensured strong state participation through the creation of Statoil, now Equinor, in 1972. This state-owned enterprise was designed to build national competency in the oil sector and ensure that a significant portion of the profits flowed back to the people. There was a clear understanding that this wealth belonged to the nation, collectively, and should be managed with utmost care and responsibility. This careful approach meant that Norway largely avoided the pitfalls that ensnared others. Instead of a sudden, uncontrolled spending spree, there was a measured, strategic plan. The government resisted the temptation to immediately inject all the oil revenue into the domestic economy. They understood that doing so could overheat it, causing prices to soar and making traditional industries uncompetitive. This discipline was remarkable. It required political courage and a long-term vision that transcended immediate electoral cycles. The focus was on stability and sustainable development, not on quick fixes or populist measures. The contrast with other oil-producing states could not be starker. While some saw their newfound wealth squandered or siphoned away, Norway methodically built a system designed for longevity and fairness. The key was strong governance, transparency, and a deeply ingrained societal belief in equality. The country's existing democratic institutions and relatively low levels of corruption provided a solid foundation upon which to build this new economic future. They were not just extracting oil, they were meticulously crafting a legacy of responsible resource management, a testament to careful planning and national consensus. The true masterstroke in Norway's oil story came in 1990. This was the year the Norwegian government established what was then called the Government Petroleum Fund, later renamed the Government Pension Fund Global. The rationale was simple yet profound. The oil was a finite resource. The wealth generated from its extraction should therefore benefit not only the current generation but also all future generations of Norwegians. It was an act of remarkable intergenerational solidarity. The idea was not to spend the money as it came in but to save and invest it, creating a permanent source of income long after the last drop of oil had been pumped. The fund operates on a clear principle. All state petroleum revenues are channeled directly into it. This includes taxes from oil companies, licensing fees, and the state's direct financial interest in oil and gas fields. The fund itself is managed by Norges Bank Investment Management, a part of the Norwegian Central Bank. Its primary objective is to ensure the long-term financial security of the nation. It acts as a buffer, shielding the domestic economy from the volatility of oil prices and providing a sustainable source of funding for government expenditure over the decades to come. It's a national savings account, but on an almost unimaginable scale. Crucially, the government imposed strict rules on how much money could be withdrawn from the fund each year. This is known as the fiscal rule, or handlingsregelen. Initially, the plan was to spend only up to 4% of the fund's real return annually. This figure was later adjusted to be closer to 3%, reflecting expectations of lower future returns. This disciplined approach prevents politicians from raiding the fund for short-term populist projects. It ensures that the capital itself remains intact, growing over time with only a small, sustainable portion of its earnings used to supplement the national budget. This prevents the economy from becoming addicted to oil money. As of 2025, the Government Pension Fund Global is worth well over $1 trillion. It is one of the largest sovereign wealth funds in the world. This staggering sum has been accumulated through decades of careful saving and astute global investment. By not allowing the full force of oil revenues to hit the domestic economy directly, Norway avoided the inflationary pressures and economic distortions that plagued other resource-rich nations. The fund is a testament to foresight, discipline, and a commitment to the long-term welfare of its citizens, a financial fortress built not just of money, but of prudent principles. The Government Pension Fund Global doesn't just sit on its cash, it is a truly global investor. The fund invests in thousands of companies across more than 70 countries. Its portfolio is diversified across equities, fixed income, and unlisted real estate. This global spread minimizes risk and maximizes potential returns. The sheer size of the fund means it owns a significant slice of the world's publicly traded companies, on average about 1.5% of every listed company globally. This strategy ensures that Norway's wealth is not tied solely to the fortunes of the oil market or its domestic economy, but is linked to global economic growth. Transparency and accountability are hallmarks of the fund's management. Norges Bank Investment Management publishes extensive reports on its investments, returns, and ethical considerations. The fund operates under strict ethical guidelines, divesting from companies involved in certain activities, such as the production of nuclear weapons, tobacco, or those causing severe environmental damage. This ethical dimension reflects Norway's broader societal values. Public involvement and debate about the fund's management are encouraged, ensuring that it remains aligned with the interests of the Norwegian people. It's their money, after all, being managed for their collective future. Despite this immense wealth, Norway is not a land of ostentatious luxury or glaring inequality. You don't see the same displays of extreme wealth that characterize some other oil-rich states. Instead, the oil revenue, carefully channeled through the budget via the fund's sustainable withdrawals, supports a robust welfare state, high-quality public services like education and healthcare, and excellent infrastructure. The focus is on a high standard of living for everyone. Statoil, now Equinor, while a global competitor, also contributes significantly to this national wealth, operating with a sense of public duty alongside its commercial objectives. In conclusion, Norway's journey from a modest fishing nation to a trillion-dollar oil wealth manager is a remarkable story of stability, long-term planning, and a citizen-focused approach. By recognizing the finite nature of its oil resources early on, and by making deliberate choices to save and invest for the future, Norway has created a sustainable model of prosperity. The government pension fund Global stands as a powerful symbol of this foresight, ensuring that the benefits of a temporary resource boom will be enjoyed by Norwegians for many generations to come. It is a lesson in how to turn black gold into a lasting blessing.